What's up, YouTube? Eric here, Mr. Fired Up Wealth, keeping the streak alive with another daily upload video here. Hopefully you're enjoying the extra videos. I'm going to give you an update on the Fired Up Wealth Investing Club portfolio, or the Fired Up Wealth Community portfolio. We've been extremely busy making buys over the last couple of weeks. I'm going to share with you today the entire portfolio, all the transaction, all the buys, all the sells, every position that's in the portfolio, the exact dollar amount, the cost basis, the percentage gain or loss. And we actually added a new position to the portfolio that I've not discussed on YouTube yet. So you're going to want to see this video, guys. Stay tuned. Okay, so the Fired Up Wealth Community Portfolio, or the Fired Up Wealth Investing Club, this is every single buy that we've made since we started the portfolio. So you can see, I'm going to scroll through this. You can see we started back here in February 22nd, started buying Tesla. Everything's here, guys. You can see it. Pause your screen if you want. You can look through it. I'm going to go to the next screen here. I'm going to talk about, actually before I do that, I'm going to talk about a stock that we just added. They just had earnings. We added one to the portfolio. I'm going to talk about that, and then I will show you the entire portfolio, the gains, losses, everything. And I'll keep scrolling here just so you can see the entire list. You can see I've been very busy. Of course, I'm using dollar cost averaging, so I'm trying to buy at technical levels, doing my best. This is what I teach in Fired Up Wealth. If you go through the masterclass series and Patreon, and you can follow this for free just by subscribing. You can subscribe to YouTube. I'm going to update you guys at least once a month, every couple of weeks of what's going on. You can check out Patreon for those options. There's a couple different options. You can see it real time. There's actually a channel in Discord, and I post literally within seconds after buying. Or you can go with a different option where I send out an email at the end of the day, and you can get an update that way. But it's absolutely free to join. At a minimum, if you're new to the channel, subscribe to the channel. Click that bell to get notifications. That way, when a new video comes out, you'll get notified right away. Let's take a look at that new holding that we just added to the portfolio. All right, guys. So I've discussed these stocks a few different times in the channel. I've got videos that compare the two, CrowdStrike versus SentinelOne for endpoint security, cybersecurity. Now, I do own CrowdStrike. I've owned it for a while. That was an IPO in 2019. SentinelOne was a 2021 IPO. We just added SentinelOne after earnings, after hours. We added SentinelOne. Wait till you see how much we're up on it already. We added SentinelOne after earnings. They had a really strong earnings. So the Fired Up Wealth Community portfolio does own SentinelOne in the portfolio now, and I'll show you what that looks like in a minute. But I want to go over some highlights in case you're not familiar with the company. If you want more of that due diligence, that deep dive, go check out the videos on the channel. There's CrowdStrike versus SentinelOne. There's a round 2 and a round 1. So round 1, round 2. And I'm going to go through these highlights really fast. So the ARR, guys, they're in hyper growth. I want to say this first. So CrowdStrike, SentinelOne, I think both stocks can do well. I personally like CrowdStrike better, but I do think SentinelOne has potentially more growth. It has more risk reward. SentinelOne's much more in the hyper growth stage, where CrowdStrike's been around, like I mentioned, since 2019, the IPO. So, and the company itself is bigger. CrowdStrike's been around longer. There's more customers. SentinelOne has more ability to grow faster because they're pretty small. You look at the market cap. The main difference is, if you look at CrowdStrike, they're more established. Their growth isn't as high, but they have more of a path to profitability. SentinelOne is much more hyper growth. It doesn't really necessarily have that path to profitability quite yet. But this is one of the hyper growth stocks that's doing great things. And it's really in a market that has a lot of total addressable market, or TAM. So I think both stocks, SentinelOne and CrowdStrike, can do well. But these guys in the ARR, the annual recurring revenue, it grew 123% year over year to 292 million. So they are doing good things. The revenue in the quarter grew 120% year over year. This is a SaaS type stock. Again, software as a service. They added 700 customers sequentially in their fiscal fourth quarter. Total customer count grew by more than 70% year over year to over 6,700 at quarter end. So these guys are growing. Customers with ARR over $100,000 grew by 137% year over year, and that's to 520. And their dollar-based net retention rate was 129%. Anything over 100% is great. That's basically saying that you have low churn, you're keeping your customers, you're expanding your footprint, selling more products to them. The fiscal fourth quarter GAAP gross margin, 63%. It is up 9% year over year, so that's an improvement. The non-GAAP gross margin, 66%. And you can see some other highlights here. I won't go into too much more, but ARR, you can see, it's ramping up, guys. FY20 to 2022, you can see this. This is in millions, of course. 67 to 292 million. So nice ramp of growth. Revenue also ramping up nicely. You can see the percentages in there, 120%. Good stuff. Margins, you can see the GAAP and non-GAAP. You know, they had a little bit of a dip here at FY21, a little bit of improvement FY22, and the operating margin, you can see the numbers there as well. So let's dig into it. They actually did an acquisition too, guys. They did an acquisition. I'll cover that really quick before I go into the portfolio. So they did expand their XDR capabilities. They also brought in identity to XDR with Ativo Networks. This is an acquisition. I think this is a really big deal. It's something to pay close attention to. This was one of the reasons I decided to actually buy the stock. We had the community vote on it in Elite Discord. And they did vote on adding this to the portfolio, but I was really interested because I thought under $30 a share was attractive. And I kind of like this acquisition. I think it brings a new element to the business. So I might do another video later and go more deep dive. Today, I just want to give you a portfolio update. Let's go look at the portfolio, see how it's doing. Okay, guys, so you can see on this right-hand side here, this is a percentage total gain or loss. You can see Sentinel-1 is up 34.78%. So it was only a starter position, but still we'll take it up 35% in a couple of days. It's our top position in the portfolio in terms of percentage gain and loss. And you can see that the total for the portfolio, we're up 7.71%. Of course, we bought some as the market was going down, kept going a little bit lower, and we used that dollar cost averaging like I teach to try to get the best cost basis we can. And you can see what happens when the market turns green. You've got nice positions here. So there's two stocks that are red, but I'm not worried about either one of them. You can see DLO is up 32%. And you can see here, so percentage of account, it shows you the percentage of the account. It's sorted by total percentage gain or loss. So of course, you're gonna have Sentinel-1 up at the top here, but you can see the numbers, how many shares we have, current value, cost basis per share, everything's on here. Feel free to pause if you wanna look a little closer. Matterport, that's in our spec bucket. So DLO and Matterport are both in the spec bucket. Sentinel-1 is in the growth bucket, but it was only a starter position, so it's smaller than I would have liked it, but better than nothing. We've got John Deere as a DJIF. We've got NVIDIA as a DJIF. You can see John Deere's up 19.45%. NVIDIA's up 11.7%. Upstart, we got a cost basis of $112. Could have done better, but still up 11.5%. And this was once a $449 stock. Who knows where it's going to go, but I think it's worth at least $150. So I'm happy with that cost basis. We've got Marvell Technology in our DGF bucket. That's up about 10.96%. You can see we've got 2.34 shares, cost basis $64, and it's trading at $71 already. Roblox, that's one that got hammered really hard, but we're up nicely now, 10%. Tesla, we've got a nice little position of Tesla here. It's about 6% of the portfolio in the growth bucket. Roblox also in the growth bucket. But you can see Tesla, our cost basis per share is $816.29. We've got about a half a share in there. WCLD, we're up 7%. Cost basis per share is $37.87, back up over $40 now. So ETFs, we've got SOX, we've got VU, we got WCLD, we got the SOX here up about 6.5%. We got the VU, that's up about 5.94%. You got Microsoft in the DJIF bucket, that's up 5%. Doing pretty well. Let me move this over and you can see everything here. So there's the rest of it. We've got SoFi in our spec bucket. That one is not recovering quite as nicely yet. Apple, Blend Labs. The only stocks we're red on as of right now, and right now is basically, what is it, March 18th. It's 2:43 p.m. Eastern on March 18th. So we might close a little higher, a little lower, who knows. Portfolio as of right now is up 7.71%. Could have done better, but we could have done a lot worse. And I'm really happy with these positions, especially the ones up 30% just in a week or so. Datadog and Confluent are the only two right now that are red. Confluent got hit way harder than I ever would have imagined. We're down about 5.4%. Cost basis per share on Confluent, $39.61. I'm not complaining with that cost basis at all. Datadog, we're under $150. I'd love to have it, in my main portfolio. Datadog, I think my cost basis is like in the 60s. But of course, that's, I've been investing in Datadog since 2019, I think was my first lot. So, Confluent, new IPO last year, got hit. It's really the only one that's kind of beat up, down 5%. But some people, even in my main portfolio on Confluent, I'm down quite a bit more. I'm down probably 30-40% on Confluent. So overall, the timing of this was really good. It was a good time to start the portfolio, which is why I decided to do it. I'm not a financial advisor. I can't tell you what to buy or sell, but hopefully this at least inspired you, showed you how to build that portfolio. This is, using that methodology to have growth stocks. First, to back up, you've got ETFs, you got dividend stocks, then you've got growth stocks. If you're not familiar with how those buckets are broken down, go check out the previous videos in this series. There's a playlist on the channel that literally starts from zero and shows you exactly how to build a portfolio. This is Infidelity. And I've been completely transparent, showing you everything we're going to buy, how we're going to build that blueprint. And now I'm showing you all the numbers. And I'm going to continuously update you guys and just show you full transparency of what we're doing and how well we're performing against the market. So far, so good. We'll see how it goes. Maybe the market dips again. It's hard to say short term. This is really long-term investing for 5+ years, but hope this video was helpful. Definitely subscribe. Take a look at that playlist. If you want to help me out for making this kind of content, let's get in the algo. Let's find new people. Click that like button, drop a comment. I appreciate your time and attention. Hope you have a great rest of your day. Take care.